Hello, it's Brian Shannon from AlphaTrends.net. Today is Thursday, the 15th of January, 2009, and we had a little bit of something for everyone here today. The market did take out that 2850 level that we've been watching and did so very decisively early on, but then we saw a very large rally from breaking that level. And as I pointed out yesterday, a lot of times when you see these widely watched numbers, when they break down through them, in particular after a large decline like we had seen of 10% over the last 7 days, a lot of times you do get a recovery that traps the shorts in here, and that's from a failed move like that, we get a fast move. Very similar to the way we trap the long players up here after a break of the two-thirds retracement, if you recall, from this high here from the election up towards this level here. It looked like it was breaking past that two-thirds retracement. It failed to hold, and then we had a fast move that just brought us down through here. So now this market has rallied very nicely in here today, right up to the declining 5-day moving average and this prior level of support. And if you'd seen the blog intraday, I said basically that right around here, this is where it looks like it's slowing down a little bit. So again, I'm going to say that this market remains best suited for intraday traders. There were great opportunities on the short side in here this morning, like I had said, and at the start of this broadcast. What the heck's going on here? And then we had seen the market kind of just going back and forth above and below the VWAP, but then later in the day we saw right here at about 115 that the market just took off screaming higher, and that's when the the financials got above their VWAP and the key level in there. So we'll take a look at those in a moment. But we saw bigger volume in here today, and obviously we saw we still have this pattern. Let's look at the 10-minute time frame of lower highs and lower lows in here, with this support acting as resistance there, this support acting as resistance here. Now we want to see this market maybe pull back a little bit further, hop back up above that 5-day moving average, and perhaps we can begin to see another rally emerge from here that lasts for more than a few days. Again, the market had gotten oversold, and we did experience a rally as I was kind of looking for, and hopefully you were nimble enough to get involved. And even late in the day here, we had a great little sell-off too that I know a lot of people from looking at Twitter took advantage of. So it remains a short-term trader's market. Anyone else is just going back and forth in here, I think, just pulling their hair out. Oil was down $1.05 today, trading the biggest volume here in the USO that it's ever traded. So you look back at volume, and volume peaks at turning points, but that's only good in hindsight. On the weekly time frame, here it is Thursday. Well, we should obviously have a bigger weekly volume that has eclipsed last week's volume, which was a record volume with trading tomorrow. We're seeing a little bit of support starting to form in here maybe, but still probably needs to get it back above that 5-day moving average, and more than yesterday I said probably above the 32 level. I think that if we get a little pullback here and then rally up above 31 and a quarter, 31 and a half, that 5-day moving average will have flattened out. I have a very small position in some DXO right now. It's not a trend trade, but it's something that just kind of feel like it's going to move higher, which we'll see if I end up regretting that. But anyways, again, we need to see the 5-day moving average, the market back above the 5-day moving average. Maybe it rallies to 32, pulls back, and then gets going. Either way, it's looking like it's set up for a potential oversold rally. The financials had a wild day as well. They broke below that $10.40 level that we were watching, and really got smashed hard early on. There was a lot of talk about Citigroup going bankrupt and Bank of America and that sort of thing. But this was the level, and I pointed that on a Twitter post, that maybe getting above $9.90, that's where this market could rally. You saw that it broke past that $9.90 level on a little increase in volume here, pulled back on lighter volume, and then that's where it really took off, and that kind of brought the rest of the market with it. It rallied right up to that 1040 level, and obviously we remain in a downtrend, and these little rallies are good for trades only. The 5-day moving average continues to decline at a very rapid rate. The daily time frame just continues to look terrible. We're below that 1040 level, and it's possible we may still see the lows in here, or new lows in here. It remains dangerous, and the weekly time frame. Obviously, we're getting down towards these lows. It's looking similar to maybe right here or right here, but there's still clearly the burden of proof remains on the buyers and the financials. We want to see that 5-day moving average flatten out and the market back above it before you can buy it with any confidence for more than just these short-term intraday trades. Semiconductors broke that $16 and $16.50 level that we were looking at. Let's take a look in here. Here's the 1650 level. It broke down below that, trapped the short sellers and the people in the late sellers, and got back above it. So that's an encouraging sign in all these markets. People are saying, well, I know a lot of people who are still long this market, but not the trading mentality people who are willing to sell. The people who are selling short on a break below this support, you don't sell short after the market drops 10% unless it's just for a real quick scalp, because these are the types of rallies that can undo you basically, in particular if you're leveraged. And a lot of people are trading the triple levered funds. The volume and volatility in there is huge. You got to really know what you're doing to get involved in that game, though. And back to the semiconductors, it's right up to that declining 5-day moving average. It got rejected there for now. We have these moving averages crossing, so maybe pull back to 1650 or so, then leap back above that $17 level, and that could pave the way for a little bit further strength, similar to the type of rally we had seen in here. Volatility remains large in all these markets. The Russell 2000 finished with a gain of 73 cents or 1.6%. We had seen a couple days ago that this support had been broken, and it was looking like we were due for a test of 44. That's where we, right in that general area is where we found the buyers in here today. And on the daily time frame, here's that 44 level. We broke down through it. After a large decline, you don't typically want to sell short the breaks of these larger levels of support that people talk about. The market remains in a downtrend. Let's see if we can create a higher low and hold at least above 45. If we can hold at least above 45, then I think we can maybe go on and create another higher high and leap back above that 5-day moving average, and then we can see a little bit more sustainable rally in here. We did fall short, though, of getting back above this prior support here at 46, so I think if we pull back to maybe 45, then break above that 46, this 5-day moving average will have flattened out, and then perhaps we can start to go back up towards 47.5, then maybe 49. But back below about 45 or so, then I think you want to be concerned and hit the sidelines if it begins to sell off again. These spiders were down below their support as well here at $84 a share. 85 and a half was what I would said should be resistance if we see a rally, and that was basically right up to this level here. Just above that we have the gap area. Something that I had just actually noticed today. I was looking at the Fibonacci from the lows here to the recent high that we had seen, and the market came down not only to this level here near the $82 level where we were looking for the potential support, but it's also a 2/3 retracement of this move here to there. So it came down, hit that 2/3 level and this prior level of support near the $82 level, and that's where it just undercut the $82 level, but that's where we got the rally from. The market creating these lower highs and lower lows below VWAP, got back above that VWAP. The VWAP held a support, and that's where the rally unfolded from. So in this market, what we need to see, I think, is probably for the market to hold, I'd say above 82.75 or so. If we can hold above 82.75 and create a higher high, same thing. This 5-day moving average may flatten out. We can get above it and then begin to see a little bit more of a rally unfold. However, this 85.75 to 86 is going to be a very important level. It's probably it actually needs to get back above that $86 level, because this prior support does have the potential to act as a larger area of resistance. And tomorrow's options expiration day, it looks like we're going to continue to see some volatility.